transactions, thus attracting more remittances through formal channels. The committee noted with satisfaction that the banking system remains safe, sound, and stable, despite the headwinds confronting the economy. It commended the recent recapitalization initiative and urged the management to sustain its regulatory oversight to ensure to an overall. At this meeting, the committee was thus faced with the option of either continuing with policy tightening or hold to observe the impact of previous rate hikes. Following an extensive review of risks and the near-term inflation outlook, the balance of risk suggests further tightening of policy to build on the benefits accruing from previous rate hikes. Key developments in the domestic and global economies. Domestic headline inflation rose further to 33.69% in April 2024 from 33.2% in March, driven by both the food and core components. On a month-by-month basis, however, headline inflation declined significantly to 2.29% in April 2024 from 3.02% in March. The food and core components also declined to 2.50 and 2.20% from 3.62 and 2.54% respectively in the same period. According to the National Bureau of Statistics, real GDP grew by 3.46% in the fourth quarter of 2023 compared with 2.54% in the third quarter, driven by both the oil and non-oil sectors. Recent Purchasing Managers Index, PMI, suggests that economic activities will continue to expand in 2024. In addition, staff forecasts indicate that the domestic economy will grow by 3.38% in 2024. According to the IMF, global growth in 2024 and 2025 is projected at 3.2% apiece, while it revised Nigeria's growth upwards to 3.3% from 3.0% in 2024. The identified headwinds in this projection are the tight financial conditions and broad disruptions to the global supply chain associated with global tensions and economic fragmentations. While these are feeding directly into a rally in the prices of key commodities such as grains and oil, global inflation is projected to continue to decelerate in 2024, but could remain above the long-run objectives of advanced economy central banks. This group of central banks are likely to pause their rate hikes in the near term to observe the trend of inflation. Accordingly, the committee will continue to monitor developments in the global and domestic economies to guide policy and ensure that inflation expectations are adequately anchored. All 12 members attended the meeting. The next meeting of the committee will hold on the 22nd and 23rd of July 2024. Thank you.
Thank you so much. That was communique number 152, presented by the chairman of the MPC and the governor of the Central Bank of Nigeria, Mr. Olayemi Kadusu. We will now take some questions from the members of the press. Please state your name, your medium, and ask your questions. Remember, you are allowed only a question. Thank you.
Good afternoon, Mr. Governor, members of the MPC. I am Nancy Naji, the anchor and executive producer of Moneyline with Nancy on AIT. Governor, I think I'll take you just a bit different from what you said, because perhaps I trust my colleagues who ask that question. But my question is around the Financial Times interview, which you granted. And the interview highlighted growing investors' confidence in market, especially in the foreign exchange market. Yes, there are conflicting reports that suggest foreign investors are hesitant to enter. Of course, we've been talking about we don't want hot money, FPI, we prefer FDIs to FPIs. Can you clarify this apparent contradiction and provide further context to reconcile these missed signals? So that's my question. Thank you.
Thank you very much, Nancy. Let me first address the latter part of your question before I go to the former, and that is on the issue of hesitancy of investors to enter. It is not the case at all. As indeed with any market, there's free entry and there's free exit. And really that is what you expect in any market. Whether it's foreign exchange, whether it's the stock market, whatever, financial markets, this is how they work. And what we've seen is, yes, portfolio investors do come in, and then at a certain level, they go out again. And I know of some who've come in, gone out, and are coming back again. And that is normally how we expect those markets to function. So I think that should hopefully put some context to that. Then the bigger issue, which is the issue of confidence in the market. Because at the end of the day, believe me, if there's no confidence in the market, then we have a problem. And I can say from every indication, we have, from the feedback we've been getting, and I must say that we've had a considerable amount of dialogue with foreign investors, certainly from the time I came to the bank, and this is something that has been consistent. So we have a pretty good feel of what the requirements are and what they look for. We have attempted as much as possible to make the market a lot more transparent. And transparency in our dealings, which of course foreign portfolio investors want to see. And to them. The distortions that we all know about, which over time have resulted in a multiplicity of different circulars to address certain things, have also helped in no small measure as we've removed that, so the confidence has also come back. Then, of course, the issue of backlogs, which was something that I've said in many times, that the reason we had to prioritize the issue of backlogs was basically to give more confidence to those who are looking to come in. Because if you have a backlog, they want you to clear that backlog before they come and invest. That's one. And number two, it really doesn't give confidence that if there's a backlog and nobody really in investing within the country. Of course, you made reference to the issue of FDIs. Well, again, two aspects of the FDIs as far as I can see. One is FDIs as relate to those who have been here, understand the system, have invested over the years. That's one. Now, what I see with that, because we've had extensive engagement with FDIs in that respect, both locally and internationally, both. And for those of them who have been here and understand Nigeria and have witnessed the different reforms that have been taking place in the financial ecosystem, very positive, and they are not looking to they are looking to continue to invest in Nigeria. And I think when you look at the ratings, the rating agencies like Fitch that recently moved us up from neutral to positive, I think that also gives further confidence to those who want to invest. Of course, the other group are those who have not invested in Nigeria before and are more on the wait and see approach. That, again, has got to be married with consistency in reforms, which I believe we're seeing and which I am certain from the outlook that comes out from the international financial community. And when we talk about Fitch, not just Fitch, but even the international banks who basically look at the reforms that are going on, test the assumptions that are made, and come out with their own recommendations. And what we see generally is a positive outlook from that sector.
All right. Good afternoon, Mr. Governor. My name is James Major with This Day. Inflationary pressures have persisted despite CBN's tightening stance. And analysts are beginning to say this is hurting manufacturing and small businesses. What else would the bank be doing, maybe differently, to address this? Thank you very much, sir.
Thank you very much, Mr. Thisday. A very good question. A very, very good question. And I think it's important to say that, yes, in terms of looking at the inflationary figure over the past year, yes, it may appear that inflation is indeed getting more and more of an issue. Yeah. And frankly, let me moderate that by saying that any kind of inflation, in my view, is an issue. So let me just moderate that by saying that. However, I think there is light at the end of the tunnel. And that is because much as we see an increase in inflation, in the inflationary figures, when you go down to the specifics in terms of food, in terms of core, in terms of headline inflation, you see that it is moderating and decelerating in increment. Okay, and that's the good news, because for the first time since, I would say, October, we've seen a relatively significant moderation in the rate of increase on those components of inflation that I was talking about. So that is very good news. It's very good news. And I believe very strongly that the tools that the central bank is using is working. It is working. Now, I've said several times, and I'll say again, there's no magic wand. these are things that need to take their own time. The pass-through and the effect of the measures in advanced countries, in developing countries, they do take time. But at least I'm confident, and the figures show it themselves, that we are beginning to get some relief. And I believe that in another couple of months or so time, we will see the more positive outcomes from what it is with the central bank has been doing.
Thank you, Mr. Governor, members of the MPC. My name is Sunday Michael Ogu. I write for Daily Trust newspaper. Between the last MPC and today, the CBN announced a recapitalization plan and also stipulated April 30th as the deadline for the submission of the implementation plans by the commercial bank. I would like to know if we would expect the CBN to share that plans with the general public. Thank you.
Well, first, thank you very much, Sunday. First and foremost, let me re-emphasize that as the central bank, it is our responsibility to ensure that the banking system is strong and is resilient. And I'm very happy to say, and we said it in the MPC communique, that the banking system is indeed sound and safe and fit for purpose. As far as we can see, it is sound and safe. So there's nothing for anybody to have any anxieties about. In terms of the in terms of what we have done with respect to recapitalization, of course, we're looking forward and saying that we need the banking industry to be a lot stronger and more robust, particularly considering the $1 trillion economy that the federal government is anchored itself towards. We need a much stronger banking system, and we need a banking system that will have sufficient enough shock absorbers in the case of any uncertainties within both the national ecosystem. And a lot of what, if some of you think back on it, a lot of what has happened in worldwide, quite frankly, over the past 3 months, 6 months, 9 months, 1 year, nobody would have predicted these things would have happened. Nobody. All the different, all the relatively strong attacks that have been taking place on the financial and economic ecosystem have been relatively challenging. And it's important that we bolster ourselves, we get ourselves ready, so that in case there are further ones, we're in a position to withstand them. We have gotten much of the feedback from the banks with respect to what their plans are. And again, to emphasize to those of you who may not remember, we gave them a long gestation period, really, to do this. And we're hoping that whole capitalization program will be wrapped up within 2 years. So we're not putting any of the banks under excessive pressure or anything like that. It is the whole idea is to work with them to ensure that we can strengthen the banking system that we already have. Once we have finished that review of the submissions that have been made, we will communicate that directly to the banks. Thank you.
Good afternoon, Mr. Governor. My name is Nduka Chejine of the Nation newspaper. Recently, the central bank issued 2 circulars on cybersecurity. One generated a lot of pushback from the public, forcing the president to suspend the levy. Can you please tell us why the central bank took the decision in the first instance to issue that circular? Thank you very much.
Thank you. I'll be surprised if that question didn't come up. Now, for clarity, the cyber security levy originated from the Cybercrime Act, okay, of 2024. That is where it came out from. There was 2015, then 2024. The Act introduced the levy, which was, and again, important to say, given that it is an act, it was considered extensively by both houses, both the House of Rep and the Senate. And of course, there was a public hearing as a result. And then after that, there was, of course, the issue of the levy, which was stated clearly as 0.5%, was embedded within the final law. Now, as central bank and as bankers to government, we were merely implementing a law that had been enacted. That's all we were doing. We're implementing a law that had been enacted. And subsequently, as bankers to government, as the federal government amended its position, we have withdrawn the circular that we've issued to the various banks. Thank you.
Thank you so much, Mr. Governor. I've received some questions from some journalists from Lagos. A question from Bukola Arulambo of Leadership newspaper. Mr. Governor, permit me to ask this question on his behalf. He said, Mr. Governor, the CBN in a publication last week stated that it had kickstarted its strategy to double remittances. Can you throw more light on this? Thank you.
Thank you very much for that question, Bukola. Very important question. And let me, first of all, give some context to this, because I think that is very important when we talk about this. Now, I'm sure over the years, many of you would have read various publications, much of which at the time, of course, was led by the World Bank, in which they figured that Nigeria had a significant amount of remittances from the diaspora. And we know, we are all very aware, I'm sure everybody here has cousins, uncles, brothers who live outside and want to send money into the country to their relatives, their loved ones. I'm sure that is a constant thing on everybody's mind. And we've identified, of course, that this is a very, very critical element of inflows coming into the country. In fact, it's estimated to represent about 6% of our GDP. 6% of our GDP. And so, therefore, we felt that it was important from the central bank perspective to have a strategy to engage this sector. Now, within that, the entities that seem to play the biggest part, the biggest role within that sector are the IMTOs. They play a very, very major role there. And so for us, it was important for us to meet them. And we had originally had a virtual meeting earlier on. And then during my visit to the World Bank IMF meetings last month, we actually reached out and invited all of them to come for a meeting. And I must say I was very impressed that many of them flew in from different parts of the world. I was very, very impressed. Okay, and we had a number of hours in private discussions and understanding what their problems were and seeing how we could help them to ensure that they are more effective in the things they do. And of course, sharing the challenges that we saw in the future for the country and that everybody had a role to play. And I must say that they responded very, very positively. Two aspects that concerned them. One was on the issue of the price and the commissions and the charges they are having to pay. And of course, the issue of, at some point in time, the rates. And of course, since the rates have converged, that became less of an issue, but they are encouraged to use the official channels to advance the cause of the very laudable efforts that they are making to enhance the flows of foreign currency coming in. Shortly after that, we set up a task force, and that task force reports to myself. So I'm very, very important. I'm very, very interested in how we make progress on this, and I'm certain that we will be successful in doing it. Our target, of course, is to double the remittance flow within the year. And as I said, we have started that process of engaging to ensure that it happens. We don't want to come back later on and tell stories to anybody. We want to ensure that we know exactly what is required. And of course, the dialogue will be an ongoing one. It's nothing that will stop. It will be ongoing to see how we can strengthen our processes, where we need to adopt, tighter and better regulations, and where we need to adopt technology. We will do so. As a furtherance to that, we recently gave licenses to 14 IMTOs. And that, again, is all with a bid to creating more competition in the sector and bringing down the cost of transactions.
Thank you so much, sir. There is a last question from Nume Ekege of This Day Newspapers, Lagos. He asked, the CBN has stopped fintechs from onboarding new accounts. Please, can you shed more light on this, along with the complaints by the industry practitioners that this is negatively impacting the industry, leading to a loss of investors? Thank you, sir.
Thank you. I see you have decided to give This Day 2 questions. A good question, and also to say that the fintechs have definitely not been we are very proud, and I know all of us in this room must be, of what the fintechs over the years have been able to do for the country, and the positive impact that is having, not just in the country, but worldwide, globally. So it is for us to support them and help them to strengthen what they've already been able to accomplish. So that is furthest from the truth. However, regulation is very, very critical in a sector that seems to have grown so incredibly rapidly. More recently, we had spoken about that in the past, we had cause to take a deep dive look at the whole issue of illicit flows and money laundering, particularly within the more heavily regulated banking system. And we all know some of the issues that came out with crypto and some of the messages that we put out after that, which, of course, gave us some cause to know that there was need for heightened surveillance, And again, we are very happy that we've been able to have a very major handshake with the law enforcement agencies, which have helped to, in no small measure, for us to identify where the potential leakages are and the places where we need to tighten on our regulation and our surveillance. And for that reason, we were concerned with respect to how we saw the issue of anti-money laundering and illicit flows as they made their way within various subsectors of the financial industry. And we felt there was a need for us to take a breather and see how we could work with the different players there to strengthen regulations, not by any means to throw them out of business. And let me emphasize that as at this point in time, we have not revoked the licenses of any of the fintech organizations or any of those players there. We have not. We've looked, we've had conversations with a number of them, and we have explained that there is need to take another look, which we are doing right now, at the processes and to see how to strengthen them. Because ultimately, let me say something here. Who benefits from this and who loses from it? If we get it wrong, the public loses from it. If we get it right, the public benefits from it. And it is our intention to ensure that our system is one that will benefit the general public. And it is for that reason that we've sat down and we have tried to bring out remedial measures that will help that sector to tighten up on onboarding and even existing clientele base. And I'm confident that as time goes on, and hopefully in another couple of months, I would say, all this will be something of the past, and then we will see that sector going back into what they've been known to do before, but certainly with a very, very stronger regulatory framework. Thank you.
Thank you, Mr. Governor, and the chairman of the MPC. This brings to conclusion the presentation of this communique. Thank you all for coming, and see you in July. Thank you.